Hey, welcome to channel S Quick Invest. Today we will do a deep dive into ComfortDelGro's financial results, 1H 2025. Is ComfortDelGro good buy for income investor? Chapter 1, Positive Revenue and Profit Growth. ComfortDelGro has reported a strong performance for the first half of 2025. Group revenue increased by 14.4% to $2.42 billion, while profit after tax and minority interests, PATMI, grew by 11.2% to $106 million compared to the same period last year. International expansion is a key driver. The company's growth is largely fueled by its international operations. For the first time, overseas revenue accounted for over 50% of the group's total revenue, with overseas operating profit growing by approximately 67.8% year-on-year. This is due to recent acquisitions like Addison Lee and A2B, and strong performance in the UK, particularly with London bus contract renewals. Chapter 2, Segment Performance, Public Transport. This segment saw a significant 29.6% increase in operating profit, driven by new and renewed bus contracts in the UK, especially in London and Manchester. Taxi and private hire. Operating profit in this segment increased by 20.6%, with full contributions from its UK and Australian acquisitions, despite competitive pressures in the Singapore market. Chapter 3, Dividend. The company has declared an interim dividend of 3.91 cents per share, representing a payout ratio of 80% of PATMI, in line with its updated dividend policy of paying out at least 70% of PATMI. Chapter 4, Balance Sheet. While the balance sheet remains strong, the company has seen an increase in net debt to $603.7 million as of June 30, 2025, compared to $218.2 million in December 2024. This increase is mainly due to funding capital expenditure for fleet electrification and growth projects in the UK. Chapter 5, Assessment for Retail Investors. For a retail investor, ComfortDelGro presents a mixed but generally positive outlook. Here's a breakdown of key considerations. Strengths 1. Diversified business model. The company's operations span across multiple segments, public transport, taxis, automotive engineering, etc., and a wide range of countries, including Singapore, the UK, Australia, and China. This geographic and operational diversity helps mitigate risks from any single market. 2. Strong dividend payout. With a dividend policy of paying out at least 70% of PATMI and a recent interim dividend of 80%, the company is attractive to investors seeking stable dividend income. 3. Growth from overseas acquisitions. The company is actively pursuing international expansion and its recent acquisitions are proving to be accretive to earnings. This shows a clear strategy for growth beyond the mature Singapore market. 4. Improving financial metrics. The company has shown consistent year-on-year growth in both revenue and profit, indicating a strong recovery and sound management. Risks and challenges. 1. Competition in Singapore. The taxi and private hire segment, particularly in Singapore, faces intense competition from ride-hailing services. While the company has adapted, it's a constant challenge that could impact future profitability. 2. Debt level. The increase in debt to fund capital expenditure is something to watch. While the current gearing is manageable, it's a departure from the company's historical net cash position and will need to be monitored. 3. Economic headwinds. Global economic uncertainties, as noted in the company's reports, can affect consumer spending on travel and impact performance in international markets. 4. Driver shortages. While easing in some regions like Australia, driver shortages remain a challenge for the public transport and taxi segments, which can affect operational efficiency and revenue. Chapter 6, In conclusion, ComfortDelGro's financials show a company successfully executing on its international growth strategy, leading to solid revenue and profit increases. For a retail investor, it offers a diversified, dividend-paying stock with a stable core business, but it's crucial to be aware of the competitive pressures and increasing debt from its expansion efforts. Chapter 7, Disclaimer. Information in this video is provided for educational purpose only and should not be considered as financial advice. Always do your due diligence or so speak to licensed financial advisor before making investment decisions. Subscribe for more bite-sized investing insights like this. Thanks for watching, and see you in the next one.